You ever stop and think about what it's like running a company like AT&T? I mean, just the sheer scale. A true titan of communication, millions of customers, operations spanning continents. How do you even begin to navigate the constant whirlwind of tech changes, fierce competition, and regulations that seem to shift constantly? It must be this huge, high-stakes balancing act. So today, that's exactly what we're doing. We're taking a deep dive into AT&T, looking at their 2024 performance, their big strategic moves, and what they see coming down the pike. And we're getting our insights straight from the source, their recent 10K annual report. It's like getting a look behind the curtain. Our mission here is really to unpack all those crucial details, paint a clear picture for you of their business health and where they're headed.
Exactly. Think of this as your shortcut. We're wading through the jargon, the hundreds of pages, so you don't have to. We want you to really grasp not just what AT&T is doing, but why it matters, how a company this enormous actually operates, how it plans for growth, and frankly, how it tackles some pretty major challenges.
Okay, so let's start with the basics. How do they structure this massive operation? I know they break it down into segments.
That's right. Officially, they have two main reportable segments, communications and Latin America. But, and this is key, there's a huge difference in size. The communications segment, it's the absolute giant here. We're talking roughly 97% of their entire operating revenue in 2024.
97%. Wow. Okay, so what falls under that huge communications umbrella?
It breaks down further into three main business units. First, you've got mobility, that's their nationwide wireless service, selling phones, plans, all that. Then there's business wireline. Think advanced connectivity, fiber solutions, network services, mainly for enterprise customers. And finally, consumer wireline. That's bringing broadband, especially fiber internet, directly into people's homes. Latin America, as the name suggests, is mostly their wireless business down in Mexico.
Got it. So with that structure in mind, what's the core strategy? They talk a lot about 5G and fiber. How central are those two, really?
Oh, they're absolutely foundational. You hear 5G and fiber constantly, and for good reason. Fiber is interesting because it's not just for your home internet. It's actually the backbone for their wireless network, too. It connects the cell towers. It's the fixed connectivity part.
Okay, I see. So fiber helps both wired and wireless.
Exactly. And for 5G specifically, having the right radio spectrum is critical. AT&T made a huge investment there, spending over $9 billion, that's $9.079 billion to be precise, on 3.45 gigahertz spectrum in a recent FCC auction.
And why is that particular spectrum so important?
Well, that 3.45 gigahertz is prime mid-band spectrum. Think of it as the sweet spot. It offers a great balance of speed and coverage. It lets them deliver those really fast 5G speeds over wider areas. It's like adding more, much faster lanes to the highway for data. More capacity, faster downloads for everyone.
Makes sense.
Their big bet is that combining strong fiber and this robust 5G spectrum portfolio will let them offer, converged services, where your home and mobile connections work seamlessly together. That's the growth play.
Okay, let's dive into how that's playing out. Starting with mobility, you mentioned that's the wireless arm. How's that performing? Seems like they've had some momentum.
They really have. As of the end of 2024, they had 118 million mobility subscribers overall. And importantly, 89 million of those are the higher value postpaid customers, the ones on monthly contracts. And 73 million of those are specifically postpaid phone subscribers.
So the core customer base is pretty large.
Very large. And their service revenue, the money for monthly plans, actually went up 3.5% in 2024. That's significant. It shows they're getting more value from those core customers, partly through subscriber growth, but also through higher ARPU, that's average revenue per subscriber. People are maybe opting for slightly higher tier plans.
And are they keeping those customers?
Yes, another good sign. Their churn rate, the percentage of customers leaving, was lower in 2024 for both postpaid overall and specifically for postpaid phones. That points to better customer loyalty. Now, interestingly, their equipment revenue from selling phones actually went down a bit because they sold fewer devices. But the fact that service revenue still grew shows the underlying subscription business is healthy. They're also making a big forward-looking investment in something called Open RAN network modernization.
Open RAN. What's that exactly?
So Open RAN basically means opening up the network equipment standards. Traditionally, they'd buy a whole cell site system from one vendor, like Ericsson or Nokia. Open RAN lets them mix and match hardware and software from different vendors. Think of it like building with standard Lego bricks instead of a proprietary kit.
Okay, so more flexibility.
Exactly. More flexibility, potentially lower costs in the long run, and avoids getting locked into one supplier. But it's a big shift.
Hmm.
It actually led to a 20% increase in their depreciation expense for mobility in 2024 because they're investing in this new tech.
Right. Upfront cost for future benefit.
That's the idea, lower network costs and better efficiency down the road.
Sounds like a smart long-term play, even with that initial hit. So mobility looks pretty strong, especially those subscriber trends. How does this fit with the rest of the network, particularly wireline?
Ah, wireline. It's really, as you said, a tale of two segments within communications. Business wireline is definitely facing some significant challenges. Their revenue dropped to nearly 10%, 9.9% to be exact.
Wow, that's quite a drop. Why?
It's primarily that ongoing decline in older legacy services, think traditional phone lines, slower data connections. That stuff is just fading faster than expected. They also made a strategic choice to simplify their product lineup, which also impacts revenue in the short term.
And wasn't there a big write-down related to that?
Yes, a huge one. They took a $4.422 billion non-cash goodwill impairment charge specifically for business wireline in 2024. That's basically the company saying, okay, the future earnings potential of these older wireline assets isn't what we thought it was. It's a formal recognition of that faster than expected decline.
So a clear signal they need to pivot, and quickly.
Absolutely. It really underscores the urgency of shifting those business customers over to modern fiber and advanced services. They're also trying new things, like launching a cybersecurity joint venture called Level Blue.
Okay, so business wireline is in transformation mode, facing headwinds. But you said it's a tale of two stories. What about consumer wireline?
Consumer wireline is the bright spot, a much more positive picture there. Their broadband revenues actually increased by 7.2% in 2024.
That's solid growth. What's driving that?
Fiber, fiber, fiber. They added another 1.0 million fiber customers just in 2024. That brings their total fiber subscriber base up to 9.3 million. That's significant traction.
So people are signing up for the faster speeds.
Definitely. While the old legacy stuff, basic phone, slow DSL continues to decline, just like on the business side, fiber is clearly the growth engine, and they're also pushing AT&T Internet Air, or AIA. That's their fixed wireless broadband, basically using their 5G network to offer home internet. That's another growth area for them.
Right, competing with cable using wireless tech.
Exactly.
And just quickly, circling back to that smaller segment, Latin America, any key takeaways there?
Yeah, worth mentioning. Their Mexico wireless operations saw revenues grow by 7.6%. And maybe more importantly, they swung from an operating loss of $141 million in 2023 to an operating income of $40 million in 2024.
That's a nice turnaround.
It is, fueled by adding 1.26 million net new wireless subscribers in Mexico. So definitely showing some positive momentum in that market.
Okay, so we've got the operational picture mobility growing, wireline transforming with fiber as the hero, and Mexico improving. But for a company this size, the financial health is paramount. Let's really dig into the numbers now. What does the overall consolidated financial snapshot look like for 2024?
All right, looking at the big picture financially, their overall consolidated operating revenue was pretty flat, actually. It dipped just slightly, more 0.1%, landing at $122.3 billion.
Basically holding steady on the top line.
Pretty much. But operating income, which is revenue minus operating costs, took a bigger hit. It decreased by 18.8% down to $19.0 billion in 2024.
And that big drop, that's mainly because of those impairment charges we talked about.
Exactly. That huge $4.422 billion non-cash charge in business wireline was a major factor dragging down the operating income number. It really highlights the impact of that ongoing business transformation.
Got it. Now, cash flow is always critical. Can you walk us through that? What does cash provided by operating activities actually tell us?
Yeah, absolutely. So cash from operations is basically the cash generated from their day-to-day core business, selling wireless plans, providing internet service, that kind of thing. It's the engine generating the money before big investments or financing activities.
How did it look for AT&T?
It was actually quite strong. It increased slightly to $38.7 billion in 2024, up from $38.3 billion the year before. And this number is really crucial because this operating cash flow is what they primarily use to fund everything else. It pays for their capital expenditures, building up the network, and it's used to pay down debt.
Okay, so that connects directly to their spending. What were those other cash flow numbers? Investing and financing.
Right. So they use $17.4 billion in investing activities. That's mostly the capital expenditures we'll talk about. And they use $24.7 billion in financing activities, things like paying dividends and, importantly, paying down debt.
Speaking of capital expenditures, the investments in networks, how much did they actually spend?
They spent a hefty $20.263 billion on capital expenditures in 2024. That's a massive investment in their infrastructure, fiber, 5G network upgrades.
And are they keeping up that level of spending?
It looks like it. They're projecting capital investment to be around $22 billion for 2025. So, yes, they're continuing to invest heavily in modernizing the network. They also mentioned using vendor financing payments, about $1.8 billion in 2024. That's essentially getting payment terms from their equipment suppliers, which helps manage their cash flow timing for these big purchases.
Okay, so significant investment funded by strong operating cash. Now, the big question for a company like AT&T, debt. How are they managing that massive debt load?
Yeah, that's always a focus. And the story here is actually quite positive, surprisingly so. They've made real progress. Their total debt was down significantly to $123.5 billion at the end of 2024. That's down from $137.3 billion just a year earlier.
That's a big reduction, almost $14 billion.
It is.
Wow.
Their net debt, which is total debt minus cash, stood at $120.1 billion. They're clearly committed to managing this. They specifically mentioned staying in compliance with a key debt covenant, keeping their net debt to EBITDA ratio under 3.75 to 1.
And why is that ratio important?
It's a measure of leverage, how much debt they have relative to their earnings. Lenders watch this closely. Staying below that 3.75 threshold shows financial discipline and reassures investors and lenders that they can handle their debt obligations. It's a positive signal.
Okay, debt reduction is good news. Now let's talk about shareholder value. A lot of our listeners might hold AT&T stock.
Yeah.
How are they returning value directly to shareholders? Dividends first.
Yes, dividends are a big part of their shareholder return story. They pay out $1.11 per common share in dividends in 2024, same as in 2023. That totaled a very substantial $8.208 billion flowing directly back to shareholders in 2024. Consistency is key for dividend investors, and they provided that.
And what about share buybacks? That's another lever they can pull.
Right. In December 2024, their board approved a new $10 billion share repurchase authorization. This replaced an older one. It signals their intention to buy back their own stock from the market, which can help boost earnings per share and is another way to return capital.
Did they actually buy back much in 2024?
They did start using it. In the fourth quarter of 2024, they bought back over 500,000 shares, about 554,000, at an average price around $22.22. So they are actively repurchasing.
Okay, so direct returns through dividends and buybacks.
Yeah.
Are there other strategic moves aimed at creating value or maybe focusing the business more?
Absolutely. Strategic dispositions, selling off non-core assets, are a key part of this. The big one is the agreement to sell the remaining stake in DirecTV, the satellite TV business, to the private equity firm TPG. That deal should bring in about $7.6 billion in cash payments spread out through 2029. They also finalized the sale of SKY Mexico in June 2024.
And the thinking there is just to streamline things.
Exactly. It ties directly back to their core strategy. Focus laser-like on connectivity, wireless, and fiber. Shedding these other assets helps them do that and simplifies the business. They also use some more complex financial tools. They mentioned using preferred interests in subsidiaries like one called Telco LLC. They raised $7.25 billion this way in 2024 and planned another $2.25 billion in early 2025.
Preferred interest, what does that mean, simply?
Think of it like issuing a special type of stock within a subsidiary. It allows them to raise capital efficiently, often tied to specific assets like fiber networks, without issuing more common stock at the main company level. It helps them manage their financing and balance sheet.
Okay, interesting financial engineering there. So we've covered operations, financials, shareholder value. Let's look ahead now. If you connect all these pieces, what are the big challenges and opportunities? What's really keeping AT&T's leadership focused, maybe even up at night? And what are their biggest bets?
Well, on the opportunity side, they definitely expect continued growth in wireless and broadband. The demand for fast, reliable connectivity isn't going away, right? It's only increasing. That's the tailwind. But the operating environment is tough. Macroeconomic risks are significant. Inflation hits their costs across the board, buying devices, network gear, paying employees. Rising interest rates also impact the cost of their debt and increase costs related to their pension and benefit plans.
And competition must be relentless.
Oh, absolutely fierce. They're battling traditional rivals like Verizon and T-Mobile, plus cable companies pushing into wireless, and newer, sometimes lower-cost players in both wireless and broadband. And in those legacy wireline services, the pressure from cheaper alternatives is intense, accelerating the decline we talked about.
What about the regulatory side? That always seems complex in telecom.
It's incredibly dynamic and a major source of uncertainty. There's a whole ongoing debate about broadband classification. Should it be regulated more heavily, like a utility, telecommunications service, or have a lighter touch information service? The FCC keeps going back and forth on this. Courts get involved. It directly impacts how much regulatory oversight AT&T faces, affecting things like pricing flexibility and network investment rules.
Any specific examples of regulatory impact?
Yeah, they mentioned state-level rules too, like New York's Affordable Broadband Act. Because of specific requirements in that law, AT&T actually stopped offering its AT&T Internet Air fixed wireless service in New York. So state regulations can directly alter their business plans. There are also new FCC rules around digital discrimination aimed at ensuring equitable broadband deployment, which took effect in March 2024, although there are ongoing legal challenges. It adds another layer of compliance.
And cybersecurity has to be a huge ongoing concern, right? Given the data they handle.
Top of mind, definitely. They specifically noted an incident back in July 2024 involving some mobile customer call data. It's a constant battle against increasingly sophisticated attacks. Plus, they're dealing with significant litigation risk. The big one mentioned is the controversy around old lead-sheathed telecom cables, brought to light by the Wall Street Journal in 2023.
Ah, yes, I remember that story. Potential environmental and health issues.
Exactly. It's resulted in lawsuits and government investigations. It represents a potentially massive financial and reputational liability that they have to manage.
So, wrapping it all up, looking ahead to 2025 and beyond, what are the key priorities we should watch for?
It boils down to execution on their core strategy. First, keep that wireless momentum going, attract and retain those valuable postpaid subscribers. Keep building out 5G. Second, aggressively expand the fiber footprint. Get fiber to more homes and businesses. Third, grow AT&T Internet Air, that fixed wireless service, as another broadband option. Fourth, continue deploying Open RAN to eventually lower network costs and increase flexibility. And fifth, really drive cost savings and efficiencies across the entire company, using automation and AI where it makes sense while, being mindful of the risks AI itself brings. And underlying all that is the ongoing massive effort to carefully transition away from the old copper networks, migrating customers to fiber and wireless, which requires working closely with regulators and policymakers.
Okay, so this deep dive has really given us that inside look. AT&T is clearly sharpening its focus on connectivity, making strides on its financial health, particularly debt, and aiming to return value to shareholders. But they're doing it all against the backdrop of just, intense change, technological, competitive, regulatory. It's a complex balancing act. So here's the final thought for you, our listener, to chew on. Given all these rapid shifts in tech, in regulation, in competition, what do you think will be the single most critical factor for AT&T's success as they navigate the next 5 years of connectivity demand?
Yeah.
Is it technology, execution, regulation, something else entirely?